Hey, welcome back to Everyday Economics, the podcast that helps you learn about the economic world happening around you every day. I'm your host, Chris Krug, CEO of the 501c3 nonprofit, nonpartisan Franklin News Foundation. Everyday Economics is a production of America's Talking Network, and you can subscribe to all of our podcasts at americastalking.com. To support Everyday Economics, please make a tax-deductible charitable contribution by clicking the link in the show description. We're recording this episode on Friday, October 25th. And join me, as always, live from Atlanta's Hartsfield Airport. It's the great one, Dr. Orphe Divounguy, PhD, economist. Dr. O, your column in the Center Square and across the Center Square Newswire, is the week ahead, and the week ahead is like very few weeks. We got a lot of data that's coming, and because we have the last day of the month falling on Thursday and the first day of the month falling on Friday, we're going to get reports that we're able to talk about on this show that we don't normally get to talk about at the same time. So what are you looking forward to next week? Because we're getting big chunks of data next week.
Yeah, totally. I mean, look, GDP, we got GDP numbers coming out next week. We got personal income, personal spending, personal consumption expenditures, price index. We have basically the Fed's preferred inflation measure. We got the employment report also coming out next week. So it's just going to be a crazy week. Lots of volatility for sure in the markets. But look, the bottom line is the economy is on solid ground, and the estimates have been coming in pretty strong. We got new home sales this past week, higher than expected. We got retail sales higher than expected a couple of weeks ago. You know, everything is pointing up. The Atlanta Fed GDP now figure is at 3.4% real GDP growth, up from 3.2% the previous week, up from 2.5% the previous month. So it's just like strengthening, real GDP strengthening, driven in part by higher productivity growth, but also higher employment growth. So you got all that, but it helps to kind of push the expectations higher, right? And so people are going to expect this economy to the numbers to come in pretty strong. You're seeing the yield on the 10-year Treasury increasing a lot. Mortgage rates touching close to 6.9% again for the 30-year fixed rate mortgage, and so things look like they're about to heat up. They're heating up, but I would say if I were a betting man, because the expectations are so high, I would suggest that perhaps the numbers will come in a little bit lower than expected. And so that's kind of what I think. So we probably will get the 10-year yield maybe easing a little bit next week because the expectations are so high.
Mm-hmm. Yeah, and with the expectations being so high, if these numbers don't come in, I can say what you can't say. We could have a little bit of turmoil in the markets next week. So
yeah, I mean,
I'll get you off of that.
Get some volatility.
Keep you in a safe place.
No, we're definitely going to get some volatility in the week ahead. We're also going to get it really depends on what the numbers show, right? The numbers come in lower than expected. Right. It depends on the markets interpret, right? Do they interpret this as maybe growth is weaker than we previously thought? Or do they say, oh, well, growth is still strong, it's just slightly weaker than expected, right? And so if people start to think, if the numbers come in lower than expected and people start to worry about growth again, then you're going to get a bit of a sell-off, and the 10-year yield might also come down at the same time. On the other hand, if the numbers come in as expected, we're okay. Volatility will dissipate a little bit. And if the numbers come in stronger than expected, the yield on the 10-year Treasury will go up, but you might still get a little bit of a sell-off as a result, because now the question will be, will the Fed continue on its rate cutting path? You know, imagine Core
Right.
PCE coming harder than expected, right? Or ticking slightly higher instead of continuing to move in the right direction. I think it's at 2.2% right now. So we're so close to the target. But if it comes in hotter, starts accelerating a little bit, then all bets are off, right? You get the 10-year yield going up, and then you still get a sell-off. So I anticipate next week the stock markets to not be. I mean, it's going to be a little bit, higher volatility, the potential for somewhat of a sell-off, very much in place. And so that's just for our listeners, that's kind of where my head's at.
Yeah, I appreciate that. And it's not as if we don't have, something else coming up the week after this coming week. Of course, we're taping this on Friday. I'm talking about next week. And then there's an election here in the United States.
Absolutely. A lot of uncertainty causing a ton of volatility. The economic policy uncertainty is ticking higher. And usually, you get that little bit of people stop. They slow down, they hold, they wait, they don't know what to expect. And so that's usually what happens before an election.
Yeah. Hey, Orphe Divounguy's column is...
But maybe, Chris, before we go, maybe it's important to say that the U.S. economy is really on solid ground. I mean, strong GDP numbers, real GDP numbers, strong productivity growth. And so even though there's that kind of like uncertainty and maybe a little bit of fear, it might just be temporary.
Well, and I think that's important to note. I mean, we still have an economy that's the envy of the world, I mean, we'll see what these numbers look like, and we'll certainly be talking about that when we tape next week's shows. Orphe, appreciate it. Looking forward to your column at the Center Square and across the Center Square Newswire. For Orphe Divounguy, this has been Chris Krug. Subscribe to Everyday Economics and a ton of other quality podcasts at americastalk.com.